Check out the video description for details. It's Tuesday, August 8th. We got a great show for you. Today we're going to be talking about Disney, a new Apple TV that could be coming out, gaming ETF, and FOOTLOCKER, of all things. We'll be talking about that. So let's jump right in with today's big one. Disney will be reporting its earnings after the bell today. People aren't sure what it's going to do. A lot of people have been shying away from Disney because of ESPN and the dealings with that. Right now, it's up a little bit before their earnings release. People think that it could dip a little bit based on the outlook that it has, and again, the ESPN problems. But we like Disney. They have an okay dividend yield. 1.45%, but Disney's strength is in the franchises that they have, and they have in their films division, as well as their amusement parks and stuff like that. But their IPs are second to none. And if you look at their upcoming movie schedule, you'll see billion-dollar opportunities for them. Literally, billion-dollar opportunities for them. Cars 3, the next Thor movies, some of those are, $500 million. Certainly The Last Jedi is $1 billion opportunity coming up. Lots of different things from Marvel Universe. Avengers, the Han Solo movie, that's a potential $1 billion one. Incredibles 2 is another $1 billion opportunity. So as you look at their lineup that's coming up, they have just so many opportunities, and as they rehash some of their old items into live action movies, you're going to see lots of opportunities with that too. So I'm just scrolling through Avengers 4. Their lineup into 2020 is pretty ridiculous. The final Star Wars movie, Toy Story 4. The list goes on, including dusting off an old franchise like Indiana Jones. So they're all coming, and Frozen 2, another huge one. They just can't run out of hits at this point. So we like Disney for that. Plus, they're going to get a little bit of money as they split it with Fox on a little movie that's coming out that was a surprise hit. It was an $800 million hit. We're talking about Deadpool 2, and as you can see, there's a sneak peek of Cable in it from Josh Brolin, and it looks pretty sweet. So that's part of the Marvel Universe, Deadpool. So Disney and Fox get some of that. I think Fox distributes it. Good, bad, or indifferent, the earnings that they have today from Disney. If it dips, another great buying opportunity. If it spikes up, there'll be buying opportunities later on. Certainly with a long term, it's one of the better stocks you can own alongside like an Apple. And speaking of Apple, Apple's got rumblings of a new Apple TV that are coming out. And I want to talk about the Amazon, their TV, in a little bit here too. So bear with me, but let's pull up Apple's stock. It's up about 1.5% today. Go over full screen. Their last earnings, we did a video on that. Earnings surprise, earnings beat. So Apple, one of the best stocks you can own. Valuation-wise, it's still cheap. They increased their dividends steadily. Great news for that. Article caught my eye over at Mac Rumors, and I'll put a link in the description of the videos. 4K resolution looks to be what's in store for the next Apple TV, and that's a big deal because it's for people that invest, gaming investors, like I like to be a proponent of on the show here. You got Microsoft. They're coming with the first 4K console coming to your home with the Xbox One X. Now, the Apple TV may stream 4K, it may not play games in 4K, but always Apple is right there with a built-in developer community, and they could plop down in your living room and take a chunk out of the gaming sector. At any time, if this were to support 4K gaming, that would be a huge trump to Xbox and Microsoft, particularly if they show up when they roll this out with Unreal or someone demonstrating on stage their new Apple TV playing one of their games rendered in 4K on your 4K TV. Talking about that, though, and it's a possibility. It may happen. It may not happen. It's interesting to see these news as it pops up. But Amazon is another one that could aggressively find themselves in your living room. Let's pull up Amazon stock here. Amazon stock, I've always felt, is always too pricey, and every time you say it's always too pricey, I mean it's run up ninefold, threefold in the last 5 years. Over time, 9-10 times what its the stock price was. So it has just gone up and up and up. Not a lot of pullbacks to get buying opportunities out of them, but we've talked about this in the past. They have Amazon Game Studio that is aggressively looking to get into the gaming market and build games that are integrated with streaming on Twitch and things like that. So they had a huge hiring blitz, and they're very serious about gaming and getting into it. And you could see them plopping down in your living room, backdooring with the Amazon TV. Now, this picture behind me is a little box, but they're already getting TVs manufactured with it built in. So these are two people that could sneak into the gaming space. Would they dethrone a Sony or a Microsoft or a Nintendo? I'm not sure. Is there room for another person on board? Maybe, maybe not. It could get interesting real quick, though, with these guys playing around in that space. I think Nintendo's kind of differentiated themselves enough, so they would be competing directly with Sony or Microsoft, but definitely something to keep an eye out when you see articles like this. Interesting play. I don't know why Apple just never fully went for the casual gamer and marketed it as a console, but that's their choice. I think they could have made a lot of money. A little share of a multi-billion-dollar market isn't a bad thing. Moving on, we've talked about in the past ETF, which is basically a fund that has a group of stocks, and it trades just like a stock, and you can hold multiple companies when you buy a share of it. And there is one stock that tracks the gaming sector. Its ticker symbol is GAMR, and it basically has all of the gaming companies that are out there. They own stock in some way, shape, or form, and they get their shares right directly from the local exchanges. So it's not like getting the ADR of Nintendo. They actually invest off the Tokyo Exchange with Nintendo. So this ETF has performed extremely well. Since its inception, it's up like 50% or so. It's done well. It pays a dividend, and there's a little shake-up there. It's no longer being called pure funds. There's some lawsuits going on. I'm going to keep an eye on this story as it develops. I'll put a link to this article there, which kind of explains it. Basically, some people are suing each other. But if you go over at purefunds.com, I'll pull up it. It just basically says terminated the NASDAQ and Pure Funds interest and Pure Funds ETS. They followed suit. Before, when you would go to their page, they would have details on their funds, including the gamer funds, of what stocks were in it. So now it's going to be a little harder to see that. You'll have to go through your broker and look at that, and possibly over to the new people that are running it, or it's got control of the fund or whatever. So not good things when that not good signs when that happens. The fund is still trading. I saw it on E-Trade. It's under the same ticker, so everything seems to be kosher in that regard, but something to keep an eye on. Some strange lawsuits going on here. Don't like to see that, but you can see since its inception, it has performed very well. This fund has. So we're going to keep an eye on it. We've always recommended this one as an alternative if you want to get into investing in gaming. If you want to own all sorts of companies instead of just individual ones, I like to pick the individual ones like Nintendo, Activision, Square Enix, some of those. More targeted where I think they're the better ones. You know, they invest in Ubisoft and stuff. While that stock has run up, I don't think it's the best investment in the world, even though they're getting better. So if you want to pick and choose, buy the individual ones. Gamer, you can still invest in to get the whole group of them, but we're definitely going to see how this lawsuit pans out and if it'll impact the ETF. But everything seems okay right now, just some name changes. But like I said, we'll keep an eye on that one. A lot of times we talk about, gaming companies, Activision, Nintendo, investing in them, or tech companies, Apple, things like that we like for gaming, the investing for gamers. But we also do stories once in a while on kind of essentials. We've looked at food stocks. We ultimately picked McDonald's, and clothing. We were looking at those, Nike, Under Armour, stuff like that. We ultimately went with FOOTLOCKER. So guess I just want to do an update on that to say, always keep an eye on some of those essential human needs and invest in those, as well as to diversify your portfolio as well as the gaming stocks. FOOTLOCKER got a nice upgrade today, which is good news. So it's bumped almost 5%. 4.5%, 4.65 to be exact. It's up today. It got an upgrade because one of the banks thinks that it can do go about 33% higher. They're claiming. So Morgan Stanley, they were the ones that upgraded it. Here's the article. We're at CNBC. This is prior to their earnings. People were selling off FOOTLOCKER because of the Amazon scare, but that's certainly bounced back since then. Pretty good dividend, 2.5%. Earnings date is coming up August 18th, so it'll be interesting to see what happens there. If they have an earnings beat, could get another nice bump, but nice bump today. We'll see what happens on earnings. We'll look to Disney's earnings this afternoon. I'll do a full story on it tomorrow on how Disney performs. So that's it for today. Thanks for watching. Give us a thumbs up if you enjoyed. Subscribe if you haven't already so you get the latest investing news for gamers. We will see you tomorrow. Thanks for watching.